Hey guys, Q here from Hyperstocks. Today we're going to be doing a case study on a stock, ticker symbol SAVA. It's currently January 28th, 2020, and the stock had a massive breakout. We've been talking about this stock in my group chat for the past couple days, and we were expecting a breakout. In this video, I'm going to talk about why I expected that breakout, why I chose the stock, what are the different telltale signs that told me that the stock was on the verge of a massive move. So without further ado, let's go ahead and get started. Alright, so before I jump into explaining this chart, I'm going to go ahead and talk about the different indicators that I have on here. The three different indicators I have are the moving average, volume, and the relative strength index. Now, the moving average, I have them both broken down to the 10-day moving average and the 20-day moving average. How are all these indicators being used? I'll go ahead and explain that as I go through the chart, and you'll see how I use every single indicator to help me determine which direction the stock is going to go in. Now, keep in mind, not you, not me, not anybody in this world can actually perfectly tell where the stock is going. However, we use these indicators as general guidelines to see if the stock is going to be headed in a specific direction. The more popular the indicator is, the more likely it's going to work. Reason being is because more and more day traders are looking at that indicator. Therefore, the more obvious it is to these day traders that the stock is going to be headed in that specific direction, the more likely that direction is going to be reinforced. Again, the more popular the indicator is, the more likely the stock is going to follow through with your predicted move. Alright, so now that we've explained the different indicators and got them out of the way, I'm going to go ahead and take them out of my way and I'm going to focus on the chart itself. I've already laid out what I have broken down here. First of all, I want to point out that this is a 30-minute candle chart. Therefore, each candlestick represents 30 minutes of movement. If you don't understand candlestick charts, then I suggest you do some studying, because literally that is the bread and butter of trading. It will tell you the stock's movement minute by minute basis, and you could break it down to 3 minutes, 5 minutes, 10 minutes, 15, 20, and so on and so forth. So candlestick charting is probably the most important thing, and you're not going to be able to catch up if you don't actually know what that is. So I suggest you do some studying. If you have questions, please leave me a comment or reach out to me personally. I do provide some candlestick courses, but that's not the point of this video. The point of this video is to show you how you could have traded this breakout. So why am I on 30-minute candles and not 1-minute candles? Well, because before I dive into the 1-minute candles and see what the stock is doing at a micro level, it's important for us to study the chart at a macro level. Macro means the bigger picture. So here I see a bigger picture of what the stock has been doing for about the last month or so. As you can see, I've already laid out some resistance and support lines with these white lines right over here that tell you the stock's movement like a step-by-step ladder. And finally, I've pointed out some moving average crossovers that were major crossovers for the stock to continue in a direction. So let's go ahead and break down the support and resistance lines that I've already laid out on this chart for you. The first resistance line that was laid out at about $3.76. Why did I lay this out here? Was because the stock had gapped up in between December 20th and December 23rd, which was over a weekend, by $2, nearly $2 or more even. And then the stock actually had a pullback before it can bounce up one more time. So on December 23rd, the stock gapped up and it hit about $3.75, but it could not make it above that. Therefore, that was its resistance line for that period. So it's safe to say that you could draw a resistance line at that point and wait for the stock to break above that point for you to make that a support line. So when a resistance line gets broken, it automatically becomes a support line. So the proper way to trade this stock after this breakout would be to place a trade anywhere above this resistance line, and now you can make this resistance line your support line. Therefore, you can put your stop loss at around the $3.80 mark. So the stock had tried to move up one more time, and it got again resisted after that day on December 27th at $5.08. So it's safe to say that you could draw another resistance line where the stock got rejected. There's always one of two things that can happen at resistance lines. The stock could either break the resistance line and make it its support line, or the stock could reverse away from the resistance line, and now the resistance line becomes more and more dominant until the stock breaks through that resistance line. So what happens next? The stock breaks above that resistance line and gaps all the way up to $6.41. So now the stock is making a pretty clear pattern. It keeps gapping up every day or every other day, and creating new support and resistance lines. So now what do? We wait for the stock to break again over this resistance line, and then we put the next resistance line at the very next high point that it makes, which would be this point right over here. So now let's fast forward to January 3rd, 2020, where the stock made a massive move above this resistance line right over here. I didn't actually draw out a resistance line, but imagine there was a resistance line right over here, because that's where you would usually draw it. The resistance line is always placed at the highest point that the stock reached and got rejected as. In this case, the stock reached $7.25 on January 3rd and got rejected until finally on January 3rd, the same day, it broke above $7.25. Now watch for the volume. This is another massive indicator that you could have gotten in on the stock with. The stock gapped up above the moving average of 10, so it gapped above the 10-day moving average, and the 10-day moving average now acted as a support line for the stock until it dipped below it. However, that's not our main focus, so the stock bounced above that 10-day moving average, which was an amazing sign of a bullish breakout for the stock. It gained massive volume after breaking the 725 resistance line, and now the 725 resistance line all of a sudden becomes its new support line, and the stock will stay above that $7.25 as long as it has the volume to do so, which it clearly does on the bottom. Now, what was a telltale sign that the stock was going to reverse at the top right over here? After these long bullish continuation candles, the stock finally hit this top and it met this candle with a long wick at the top. Candles with long wicks at the top will typically mean that the stock is getting a little bit of bearish pressure from the other side. That means that the stock had tried to move all the way up here. However, the bears pushed it back down until it got pushed down enough to cross under the 10-day moving average. Now that the 10-day moving average is above the candlesticks, it now acts as another resistance line. So there's multiple types of resistance and support lines. Some will be horizontal and some will be the 10 and the 20-day moving average. Now you can make the moving averages between 10 and 100 days. It's really up to you, however many days that you want. But for day traders, it's most common that you have to look at the 10-day and the 20-day moving average. So after the stock met these long wicks at the top, it got met with more bearish volume. Therefore, it pushed it back down. And the reason it pushed it back down as well is because of the RSI. The relative strength index on a stock will tell you if the stock is becoming overbought or oversold. Now, typically the rules between overbought and oversold is anything over 70.70 or 70 points is going to be considered overbought, and anything under 30 is considered oversold. So now that the stock had become overbought, it was bound to pull back. It's a smart pullback because you don't want anything to shoot straight up and keep going up because it will drop even harder. So this pullback was fully expected, and the stock broke under the 10 and the 20-day moving average. The 20-day moving average is a stronger resistance or a stronger support depending on where the stock lies, and therefore the stock got pushed all the way back down to $6.63 below the $7.25 support or resistance line. So remember, when the stock broke above this support line right over here, it became its resistance, and the stock broke below it. Now it became, when the stock broke above the $7.25 resistance line, the $7.25 resistance line became its support line, and the stock broke below it. Therefore, the very next support line will remain its support line. It will not go away. So the stock is now being supported at $6.45, where the previous resistance lied. So now we can just watch the stock and wait for it to make another move. The stock goes back up and it had a large gapping candle and it crossed over the 10 and the 20-day moving average. The stock moved sideways and kind of coiled back and forth, but it stayed strong. It stayed above the $6.45 line, and we wanted it to make a move exactly like this. So now that we've looked at the stock from a macro perspective, we want to zoom in into a micro perspective and look at how we could have traded on a day-to-day individual basis. Remember, these are 30-minute candles, so they're showing you 30-minute increments. Day trades usually happen anywhere between 1 minute and even less than 1 minute, sometimes in seconds, sometimes in 5 minutes, just depending on how well the stock is performing. So we're going to zoom in to January 28th, 2020 and see how you could have traded the stock after looking at it from a macro perspective. Alright, so here I have my candles set to 1 minute candles, and I'm going to be primarily focusing on January 27th and January 28th, but the actual trading will take place in January 28th. So why am I focused on January 27th? The reason why is because January 27th was kind of a foreshadow to what could happen in January 28th, and it also set us up with the proper resistance lines. Alright, so I've drawn out some support and resistance lines to help us kind of look at this graph with a little bit of perspective of what I am referring to when I say support and resistance. So on January 27th, you could see that the stock had tried to break above $7.47, and we call that testing the resistance. So the stock is testing the resistance of $7.47. This is the new resistance that the stock had set for itself. Therefore, we place a resistance alert at $7.47, the same idea as any day trade goes. So we wait for the stock to break over $7.47, and now we know that it's safe to enter, and we can put a stop loss somewhere around $7.45 because this new $7.47 resistance line is now a support line, and it shouldn't be broken if the stock is going to continue in a bullish direction. So now we know that the stock had broken over $7.47 on January 28th. But what could have told us that the stock was going to do that on January 27th? We always want to look at the end of day volume and the end of day candles. So you could see that the stock gained a lot of bullish volume towards the end of day on January 27th, and it had a large green candle at the beginning of day on January 28th, followed by another continuation candle, and this is very, very important. That candle placed the stock above both the 10 and the 20-day moving average, and now the stock has that support from the moving averages. Therefore, it's going to keep riding them until it no longer can, because it's becoming a little overbought. So the stock continues a rally until it reaches $7.47, and as you can see, the stock kind of moved sideways until it gained a little bit more volume and broke above $7.47. This instantly now becomes our new support line. So technically, you could have entered the stock anywhere after the stock broke above $7.47 and waited for the stock to make a new high. If the stock broke below that resistance line or that support line, you can stop loss and sell out of the stock because it means that it's going to reverse in the other direction. So the stock breaks above it and makes it all the way to $7.74 before it sees some red candles and the stock dips below that moving average. Now at this very point, you could sell out of the stock if you don't feel comfortable, or if you think the stock is going to continue going up, then you can hold and set a stop loss at a place in which you're comfortable losing. And so the stock kind of moves sideways through the morning, and it doesn't make any moves until it starts gaining a little bit of more green volume, and it has another crossover between the 10 and the 20-day moving average. Now remember, we placed another resistance line at $7.75. The reason why we placed it at this very point right over here is because the stock had reached that point before getting rejected and pushed back down. It bounced above the $7.45 line and it kept going up. So now we wanted the stock to be alerted at $7.75, where it previously reached that high. The stock gaps above $7.75, sees a huge gain in volume, and now the stock is just moving up on up until it sees this long red wick candle right over here. So the stock makes a massive gain between $7.75 all the way up until $8.80. And then what happens? The stock is now becoming overbought. Remember, the RSI is going to be your best friend to tell you when something is overbought or oversold. The stock is clearly overbought at this very point right over here. and it needs a healthy pullback. It's only right if the stock makes a healthy pullback. And then what happens? You can clearly see that the stock makes a bullish flag. So the stock goes up and now is moving sideways, and it's making this little triangle right over here and trying to break above its previous high. Its previous high at this very point would have been that red wick candle. So remember, a long wick at the top means there's a lot of bearish pressure. Combine that with this amount of volume, the stock is bound to have a pullback. Finally, the stock pulls back and it breaks above the moving average again, and it continues going up. Again, the stock is becoming overbought, and now you're seeing a negative divergence on the RSI. The negative divergence means that the stock is making a higher high. However, the RSI is making a lower high. As you can see, the stock goes higher over here, but the RSI is actually lower than its previous high. So now that the stock is confirming some kind of a reversal, we want to look for long wicks at the top in which it clearly shows, and then another red candle, another red candle. Now the stock dips below the 10-day moving average and the 20-day moving average. They both have a crossover, and the stock is now being resisted and is going down, making another bullish flag. This one is larger. This one stretches from this point all the way to this point, and we wait for the stock to make another move in the next few days. Now we have new resistance and new support lines. The new support line is going to be at $7 or $8.95, and another support at $8.75, and its new resistance is now at $9.35 and at $9.75. The reason being is because that's where the stock got rejected from going lower, and it got rejected from going any higher. So that kind of breaks down the ticker symbol SAVA and how you could have traded it for profit. During our group sessions or within the hyper chat, we usually talk about resistance, support lines, stop losses, price targets. You got to remember that nobody knows the proper entry and proper exit to a stock. Therefore, you set these resistance alerts and you set these stop losses at specific points. That way you can prevent yourself from holding on for too long or holding on to a losing stock. If you guys have any questions, please feel free to message me directly via Instagram. If you're seeing this on YouTube, please comment on the video below. If you have any questions at all, we'll be more than happy to answer. We will also leave our email somewhere in the description. That way you're familiar with how to reach out to us. And finally, if you're not a part of the hyper chat and you are interested in joining, please let us know via Instagram or via our website, hyperstocks.org. Thank you so much for watching. Again, this is Q from Hyperstocks.